Good morning and welcome everyone, and thank you for joining us today. I'm Paul Craven. I'm part of the Protection Specialist team. I just want to start this by saying a big thank you to everyone that gave us feedback last week, really positive feedback, and it has been noted. So like some of the positive things that you were saying that you really liked about last week, we're going to really try and make sure that we incorporate that in everything else that we deliver as a team. And I know my colleagues Steve and Gary have been kind of tinkering with what they're working on for next week, taking on the really positive feedback you gave us. Now, if you did miss last week was all around uncovering the need, uncovering the opportunity, questions to ask clients, because at the end of the day, that's what the advice process is. It's what questions do we need to ask to help unlock those opportunities with our clients. Now, this week we are talking about family protection and in terms of relevant life plan. How can we use the business to provide a really good benefit for the owners of businesses? We also want to extend it beyond just kind of the directors of their own businesses and open this up. How can it benefit employers using this as an employee benefit as well? So we'll start around the opportunities and the need, and again focusing on that. How do you help people understand the needs that they have to unlock the opportunity? We'll then look at the detail of relevant life plans, cash treatment. That's clearly a key part of a relevant life plan. And finally, how Vitality's relevant life plan is going to offer more than just the death in service. So I'll turn the camera off because that normally leads to a better bandwidth, so we can get better quality, but I'll come back and see you at the end. If you do have any questions, I am joined today by Steve Harold, who will be running next week's webinar around ownership protection, shareholder protection. So if you've got any questions relating to this webinar, please place them in on the right hand side, and Steve will be hosting those at the end, and we'll come back to you soon. That's right. Hope you enjoy. Right, there we go. So last week we were looking at the size of the opportunity, private limited companies, and just how many businesses we have in the UK. And even though, yes, the last 12 months has been a tricky 12 months, if we look back, we always see that it bounces back. We are a nation of very enterprising people that want to kind of be our own bosses and have our own businesses. Now, the key market for relevant life plan tends to be in this area highlighted. It tends to be like the micro businesses. So it's like the owner run businesses. Small business could be a sole director, might be just be 2 directors in the business, no employees, or it tends to be those with fewer employees. This is definitely a target market. But then it's about what is their business protection needs. And for most, they could just be looking at, well, if anything happened, it's not about shareholder protection. It's not about any of the other benefits. We just want to make sure the family is taken care of. So that's why they would look at relevant life plan. They would look at relevant life plan and not group life or death in service because it's only, say, 1 or 2 people. That's not to say that there's not an opportunity for relevant life plan with the small businesses and the medium-sized businesses, because they may have group life in place, but they could use a relevant life plan as a way of topping up any benefits they have within group death and service. It could be that you just have an employer that's really selective about who they want to insure. And group death in service, they have these anti-selection rules, so that they would like to see everybody covered or everybody of a certain category covered. So if you've got an employer that wants to be very selective, again, relevant life plans are a great opportunity, especially when they maybe just want to pick out only a handful of key people. I'm going to talk later about how you can also use the Vitality relevant life plan as a way to retain and attract quality employees. And again, that's a difficult one. When you ask an employer the question, how do you go about making sure that you are an attractive place for your employees to work? How are you going to meet various different needs of your employees? And next week, Steve, as I mentioned, is going to be talking about shareholder ownership protection. And sometimes we look at the company valuations and the amount of cover somebody wants doesn't quite stack up versus the business valuation. So again, you could use a relevant life plan as a way of getting all of the cover that the client wants, but you just need to structure it in a slightly different need. So there's a few different ways you could look at relevant life plans, but we're going to focus on some of these issues a bit more and just really try and unlock these needs and opportunities. Now, I think we say most people don't have enough family protection. I think most of us know this. People tend to cover just the mortgage, but that just buys every brick in your house. Doesn't actually do the job in terms of protecting the family. Now, I will admit I have borrowed this, so if you are watching, you will know that I borrowed this from you. And I think, that most people will at some point have played the lottery. It used to be you just buy your ticket once a week, where now you can probably play it every day. And we've all had those moments, when we're thinking, whether we're daydreaming, wistful thinking, we're just thinking, well, how much do I need to win in order to be able to stop me from having to work ever again? And we all have those days and those moments. And what is your figure? And again, if it's 20 million, I think we all know we can hand our notice in. Apologies if my boss is watching. But what is that number? You take that number and then you detract from it all the cover, all the life cover that will get paid out should that person die. That difference is the shortfall they will be willing to leave their family. If they were alive, they would want X million. But if they died, they're going to leave their family with just the house, no additional income. Now, I think this is a really nice way of just highlighting that gap between what I would want for myself versus what have I actually done for my family. And again, by all means use that. And I think that's kind of a nice fun way of just trying to get that point across. Now, do you employ staff? So I know we'll have many advisors that, you've got your own businesses, you've got your employees. How much does it cost for you to attract and replace a new member of staff if somebody leaves? And we've been looking, and the average salary in the UK is about 27,000. And it's estimated the cost of replacing a person on 27,000, when you're looking at recruiter fees, the time taken, lost productivity from that person not being there, is about £12,000. And that figure just rises. And if you're looking at anyone really senior in an executive position, that can run into the tens of thousands of pounds. And you also think about what's happening at the moment. People will be looking at their quality of life, their work and home life, and how do you get to retain people? Most people, the only way they can try and retain employees and try and get their loyalty is through paying them more. And that's not always possible. So again, you can look at relevant life plans for your clients who employ people, as it's a really affordable way. It would cost them less than giving their employee a pay rise to provide them with several £100,000 of death in service with a wellness package, which would give them and their families the rewards and the discounts. But we'll talk about that a little bit later in terms of just why we can help it in that space. But again, I think it's a very, very kind of topical thing to be looking at the moment. And again, last week, we also mentioned around working with professional connections. And accountants always come top of that list when people talk about business protection. So how can we have a really good conversation with an accountant? Now, accountants tend to confuse a relevant life plan with key person cover. The setup looks very similar, but it has different tax rules, and it is set up slightly differently because we're using a trust. So if you are looking at any networking opportunities or a conversation with your own accountants, it is worth having a conversation around looking at their own business and being slightly consultative with the accountant. Is the accountant maybe thinking they need to increase their fees? How are they going to help justify any fee increases to their clients? And I'm sure most business owners will understand that costs need to go up. But if they can highlight ways a business owner can extract profit from a business in the most tax efficient way, then clearly that's what a lot of people hope their accountant will do. And given that corporation tax is going to rise for a lot of people up to 25%, if you can have something paid for through the business as an allowable business expense, such as a relevant life plan, protecting your family, That's just a really good tax saving and just helps offset any potential increase in fees that accountant may have. So there's a good reason they might want to do a referral once they've highlighted the opportunity to the client. And again, accountants quite often will be looking at the profit within a business, and they'll suggest to their client that they make a pension contribution. And I know this will not be for everybody, but for those of you who do advise in pensions, the lifetime allowance freeze for those high net worth clients, their group death in service benefits could be forming part of their lifetime allowance because it's a registered scheme. So not being in a registered group death in service, but having something like a relevant life plan. So maybe this is just for those slightly larger employers where they want to offer their executives, the boardroom members, relevant life plan instead of group death in service. They could then free up their lifetime allowance to do maximum pension funding, because clearly, for those of you in that pension space, you'll understand that it's a really good way of potentially passing on money to another generation. So I think there's some really good opportunities, but previously when people have thought relevant life plan and accountants, there was nothing on the HMRC website, where now, if they look at the employment income manual, relevant life plans are named, they're mentioned, the taxation's explained. But if you do get any difficulties with explaining them to an accountant, please come back to us. We'd be really happy. We've had this conversation many times to show just how good they are and that they do meet all of HMRC's tax rules. Now, relevant life plans, even though they sound so good, allowable business expense, protecting the family, great way of getting profit out of the business in a different way, but still 7 out of 10 owners of businesses have not heard about relevant life plans. The receptiveness, and most people following the advice that they receive, because they can see the benefit, will follow the advice. And then, and a lot of the reason why people are so keen is because they realise it's a really affordable way to get that additional family protection in place. We're very mindful that when it means we're paying out of our own pockets, our own wallets, we're very careful what we spend. But if we're a business owner and we can use the company profits to provide it, and we feel like it's the tax man paying for this instead, then we should kind of shift and we're like, how much can I pay for in that way? Now, if you think about, if you had the opportunity yourself to pay for your family protection through the business, would you? I think we know the answer. If you could get help with your employees' productivity, reduce absence, staff retention, would that be something as an employer you would really like to have? And how do you look to reward your really key employees that are really important to you, both personally and to the business, in a really affordable way? And again, I think this is some of the questions we need to be thinking about. And I think, as much as, it's about tax is not the most exciting of subjects when it just comes to ultimately we all have to pay it. But if you just asked a business owner, if you were going to buy a new laptop, computer, phone, whatever it may be, how are you going to buy it? Are you going to buy it through the business, or do you go and personally buy it? And I'm sure you'd be there just thinking, well, of course, to buy it through the business. Why? It's the cheapest way that we can buy it. And even though we're talking about a laptop or a phone or a printer, it's the same with relevant life plans. The fact it's a different product, it's the same taxation. And clients really get it. So you don't need to go through this. This is just so you understand that I would be using something as simple as, if you need to buy something, how would you prefer to pay for it, business or personally? The reason why a relevant life plan is so good is this. And again, we'll just go through the numbers, because I know sometimes people just go, I'm not quite sure where the final numbers have come through. So if we're saying Mark here is a 40% taxpayer, but this still works if you're a 20% taxpayer, you still get a really good saving. If he was paying £1,000 for his family protection, £1,000 per annum, to have that £1,000 in his bank, he would have paid income tax, he'd have paid national insurance, so gross income £1,724. Because this is coming out of the business, the employer's paying national insurance, So that's about £1,952. But all of that, because it's wages, it's salary, we get to offset against corporation tax. So the net cost to the business, £1,589. So Mark knows it's about £1,000 in his pocket, costs his business £1,589. On the other hand, Mark knows to buy that laptop or to get £1,000, if it's done through the business and not personally, there's no income tax, no national insurance, still gets the benefit of corporation tax relief, £810. And this is where the saving is. So this is why the key audience for relevant life plans tends to be the owners of their own limited companies, because they can just see this figure, they know this figure because that's how they choose to buy as much as possible. They know it's about half price. Now, we did say, the corporation tax change, which is coming in 2023, that applies to both whether you're paying yourself money or whether it's going to be allowable business expense. But you can still see that the tax saving is still considerable, and you're saving just over half to pay for something this way. So family protection, roughly at half price. So the summary in terms of the relevant life plan and the benefits there is relevant life plan is a great way of getting your family protection and making a huge saving, extracting profit from a business in the most tax efficient way. And given future tax rises, this will be something people will be wanting to look at. I'll talk about this later because from an employer's point of view, and I know my colleague Gary that will be looking at key person cover in the last week. From the employer's point of view, if you're offering this to employees, how do you reduce absence? How do you reduce presenteeism? How do you get more productivity and get a happier workforce? Because we know that if people are happy in what they do in their work, they will be more productive. So how can we use a relevant life plan to do that? So we've looked at some of the different opportunities, some of the needs, reducing that gap in terms of family protection. So let's take a bit of a look at the how you actually set one of these up, because they are incredibly simple. I also think it's good to kind of just keep in your mind, this is the most frequently recommended piece of business protection. This is your gateway product into business protection because it has the most favorable tax treatment, and it's protecting the one thing which is really close to everyone, which is our families. Now, in order to meet the wholly and exclusively for the purpose of business rule, it needs to be employees of the business rather than those owners on the right-hand side. So it's not for sole traders, it's not for equity partners, it's not for limited liability partner members. Any of their employees can have it, because the key is you need to be an employee. Key market, though, is shareholding directors. So these are the people that own and work in their own businesses. They are allowed to have a relevant life plan. So this is definitely the key area. Now, how would you set one of these policies up? Really simple. It is a life of another policy. So the policy will be owned by the employer or business name, whichever, whether it's an individual or a limited company. Name of the employee is your life assured. We're always going to make sure the policy is in trust. Now, the trust is just to make sure that if a benefit is paid, it doesn't go back to the employer, that it goes to the beneficiaries of the life assured. Who pays a premium? Business, allowable business expense. Who's going to get benefit? It will be the beneficiaries that the life assured has nominated. So it's a really good and it's simple to set up, and we can do all of this online. So there's not too much paperwork. Straightforward life cover only with terminal illness benefit. It ensures one employee per policy, always in trust from outset. Maximum cease age, which is set by HMRC, because it fits within their rules of in anticipation of early retirement or death. So it would be 75 in the same way that the pension rule fits. There is one provider in the market that does offer life with a type of critical illness cover, but because of this legislation, there is the requirement that if the person was to make that claim, they also have to retire from the business. Now, this is why Vitality, we're just leaving the relevant life plan as life cover with terminal illness benefits, just to avoid any of the complications. Now, a frequently asked question that we get is, how do you calculate the sum assured? And if you think about this, so this is a policy owned by the company or owned by the employer. So thinking of this in terms of, for myself, Vitality doesn't know what my mortgage is, doesn't know what my outgoings are. So from a point of view of what does the employer know about the employee, they don't need to get that full information relating it back to their personal need. They can just choose a fixed sum assured. It could be budget driven based on affordability, or they could use a multiple of income. Now, people tend to get really focused on multiples of income because that's where most death in service policies have been driven from, in terms of you get, say, 4 times your death in service. But just remember, you can just fix your sum assured, base it upon premium, or if you want, use a multiple of income. From a Vitality point of view, we don't look at any income multiples if their total life cover personally is less than 2 million. So for most people, you really don't need to get fixed on the idea of a multiple. Only if we go over the 2 million do you need to be looking at the income multiples on the left-hand side. But that is really just for your large sums assured. Now, the example we showed before with Mark, if you want to create one of these, because either you want something on your file or you want something to show your client, to show them the tax savings, then you can create your own bespoke comparison of paying for it personally or paying for it as a relevant life plan. Taxsavingscalculator.co.uk is the website to go to, and it'll just allow you to drop in the premium, select how they pay the premium. Is it from dividends? Is it personally? Or what's their tax rate? It will then give you this comparison. And even for a basic rate taxpayer, the savings are about 38, 39%. So it's still a considerable saving for most people. Mini case study. So we mentioned Mark last week. And if we were to look at Mark as a sole shareholding director of his own business, but he does have employees, but Mark is just thinking, well, actually, I want to make sure that I've protected my own family. I'm not wanting to protect any of my employees. Mark can then just look at setting up a relevant lifetime just for himself. He's going to place his policy into a trust to make sure the money goes back to his family. It's got nothing to do with business. And whoever he's appointed as his trustees, make sure they have a letter of wishes so that the trustees know who that money is to be going to. And you can see, the benefits to the business. It's going to be a deductible business expense, no national insurance contributions, which is clearly, because Mark's the owner of the business, desirable to himself, but also he's going to get family protection paid through the business and no IHT liability, policies and trust, and he's got no benefit in kind, which again, to be able to have benefits paid for by the business which don't form as a benefit in kind, this is absolutely key as to one of the reasons why people want to look at this. Now, we've mentioned that all relevant life plans all needs to be written in trust, and because it's business protection, they need to be in trust from outset. So at the point this plan is activated, it needs to be in trust to avoid any potential tax charges further down the line. So this is kind of, I suppose, a reason why Vitality as well, because we've embedded a signature-free trust process in the application. You've got a choice. You can use paper, as you can see in there, but you can use a signature-free trust online. This means you don't need any witnesses. You don't need any signatures. You're just using oral contract law to actually create the trust. So it's quick, it's really slick. So it doesn't delay any part of the process. Now, about 90% of our relevant life plans use signature-free trust because it does streamline the process considerably. And I know when I was looking at some of the numbers in terms of persistency for policies written in trust, and this is just right across for all product lines, there's about a 70% reduction of lapses when policies are written in trust. So I just think it's also, whatever type of business you're doing, if the policy is in trust, it is really good on persistency. Now, a relevant life plan trust with Vitality, we always use a discretionary trust. So this means that who receives the benefit and the proportion of the benefit they receive is down to the discretion of the trustees. but the trust has already been carved out. So it says, you know, the potential benefits are to go to the life assured. So this could be in the event of terminal illness, the benefits could go to the life assured if wished. But the common ones are the spouse, the children, remoter issue, which tend to be grandchildren, former spouse, brothers and sisters, or anybody who has been notified to the trustees in writing can be beneficiaries. So you don't need to name beneficiaries within a relevant life plan trust, but if they're not married to the life assured or related through as family, you can just click on add beneficiary, drop their name on, and at least they're within the category of potential beneficiaries. There's another part within the trust which then moves on just slightly under that part of the form, which is about default beneficiaries. Personally, I would leave this blank. This is just a safety valve, and if money gets paid into a trust and the money is not paid out after 125 years, none of us will be around, but it then just means that legally the money can get paid out to the children or remoter issue of the life assured. So that's already set in there. So unless you want something different for that safety net valve of in 125 years time, you can just leave that one blank. If you add anyone's name in there, you can't remove them later, which is another reason why I would suggest you leave that section blank. And finally, automatically we make the company, the employer, the trustee. Now, if you want to make sure that you've added somebody else as a trustee, people tend to like to add their spouse or a brother, sister, etc., then you click on add additional trustees, which is, I would say, is vital for when you've got those sole director businesses. Then remember that the trustee is the company. So if that person is the person who's died, who's going to act as the banker to pay the money out? So add additional trustees when you've only got one person at that company. And it's really simple: name, address, date of birth, email address. And we ask for all of that information. Remember, there's no signatures. So we need a few different points so we can then identify at the point of claim to make sure we're dealing with the correct person. So that's why we want multiple different things we can reference. So when they contact us, we can do the checks. And then finally, you get to the end of the trust. It's an oral contract. So you read out a number of declarations, just 5 declarations, tick the boxes, click continue, and that's it. The policy will be in trust from the moment it goes live. If there's been any mistakes, or if a client wishes to change anything that you've locked into that trust document, when you get to the end of the application, so after the bank details, after entering details of somebody's doctor, if we've requested those, when you get to the point of start date, you can print out a copy of the trust document. You could share it with the client so they could double check spelling, date of birth, potentially email addresses. It then gives you in the bottom right-hand corner the ability to click on edit the trust document, so then you can make amendments, because once you've submitted that through to us, at the very end, at the start date, the only way we can kind of note anything is you could send us an email, but we can't physically amend anything on the trust document. It's like you have committed it to pen and paper. So simple, it's slick, you can just use an online process. So you could literally, you can sell one of these over the phone. You can do everything that you need to over the phone. So we've looked at the opportunity, we've understood the relevant life plans, tax savings, we've looked at how to set up. So now we're going to look at, why Vitality? Why, everything that's gone before, you could just apply to anybody's relevant life plan. So why Vitality? How can we offer something over and above? Now, for me, I think this is a really key element, the continuation option. People don't always stay with their employer. People don't always have their own businesses. They may choose to wind up a business, set up a new business, retire, move to a new employer, or they've just decided to step away from the business. So I think what's really important is, because they've been fully underwritten to take out this cover, and they've got the cover and they've locked in that price, it's really good to have no additional underwriting, no change in your premium, and actually keep this benefit. So this is portable. This is almost like, part of your briefcase. And wherever you go, you can take it with you. If you move to a new employer, we just change the bank details and we'll amend who the trustee is. But importantly, if you ever do leave and you want to pay for this cover yourself, again, you can. Again, all the same things apply. There's no underwriting, no change in premium, but you do get to keep your terminal illness benefit. And the reason why this is important, there are multiple providers in the market that if you convert a relevant life plan to personal protection, they will remove terminal illness benefit. And I would just suggest that if you think about this, because it might not sound like a big deal, but if your client then continues to pay for their life cover, but in the last 12 months of their policy, they are diagnosed with a terminal illness, if they have no terminal illness benefit, it doesn't send a good message. It's either you need to die within this period of time or there's no benefit. But with terminal illness benefit all the way to the end of the plan, it still has value. And I know personally, I wouldn't want that on my mind. I would rather people have the ability to keep terminal illness benefit, because the older we get, the more likely we are to need that cover. And unfortunately, very few of us just go like that. We tend to have an illness prior to death. So we've had 12 months of absolute uncertainty, lots of time to think and reevaluate what's important to us. I'm sure there's many people, maybe on the call today, or if you're employing people, I'm sure there'll be employees that are thinking, does my employer value me? Am I happy where I am? Should I look to change anything? And, Public Health England have come up with, that 7 out of 10 adults are looking to be more active, be healthier because of what's happened in the last 12 months. We want to be healthier in our choices when it comes to meals. People are thinking, I want to quit smoking. So I think we all have that moment where that cape of invincibility, that it will never happen to me, all these stats apply to someone else. We suddenly thought it got a bit too close and I need to make changes, because if anything like this ever happens again, I want to know I'm in a really good place. So how do employers show their employees that they care? How do employees try to help their employees to the point where they hopefully will be more productive and loyal and stay with the business? And again, we looked at the cost. How much does it cost to replace an employee if somebody leaves? So how can we help reduce an employer's staff turnover, reduce absences, reduce presenteeism, which is when people come to work even though they probably shouldn't have done, but they feel like it's better to be seen than actually get better at home. And what is a really affordable solution to be able to do this? Because I think a lot of employers, like we're seeing the stats were showing that during pandemic, and I know we're still there, but about 84% of employers were thinking, actually, no, I am concerned about my employees. I really like them. I do hope they're okay. And 40% were saying that they're very concerned about their employees' well-being. But how do you get a really affordable solution? How do you reward employees? How can you try and implement health and wellness program to your employees? Because we can see most of these companies, they tend to be much smaller businesses. So to do that affordably, again, could be a step too far, especially given where we are in terms of the economy at the moment. So it's important that we can try and help people keep their costs to a minimum whilst doing all of these good things that people want to do. So with Vitality, I'm sure many of you will know, we offer a full package of rewards and discounts and wellness. So employers could offer this benefit to some of their key employees. I'm not saying everybody, but like that handful of people where they're like, no, I really want to make sure you don't go anywhere. I want to really make sure you stay with the business. I need your loyalty. So we can offer them the death in service, the family protection with a significant discount. So anyone paying the premiums will be happy to see that this is affordable. It's allowable business expense, and the wellness and engagement, and it comes with these status levels. So employees can work their way through the levels, and anyone who's slightly competitive, which I think most of our team is, will actually find that you do. If someone sets you a challenge, you want to work through it. You want to be better than the next person. So it's a case of, the premiums could change, but the employer's paying for it and it's allowable expense. But this is a way of trying to motivate employees. Looking at our average premium, which is about £57 a month for a relevant life plan, even worst case scenario, it would go up by £1.42 the following year. And the year after that is probably £1.42. So it takes a few years before it gets to £1.43. Compare that against any other business expense, And this works out to be a really competitive and affordable way to put the solution in place. And, you know, if someone's on gold, you know, it's 28 pence, you know, it's negligible. But what are you actually doing as the employer? Well, you are trying to get a return on your investment. You want to try and make sure that you're helping your employees be less stressed. You want to try and help them achieve what they want to do personally. And I think most of us, you know, we'd appreciate that, you know, that the healthier somebody is, the more active and the more productive they're going to be. In terms of looking at absence, we've just seen that actually absence has been growing and presenteeism has really been growing. That's why, you know, people coming to work and they probably shouldn't have done, they may have some health issues. So to try and put health and wellness in place for employees in a really affordable way, but it really shows your employees that you care. And again, this is a return on investment. So, you know, remember, this is less than a pay rise, but you're offering someone potentially hundreds of £1,000s of benefit. So worst case scenario, something happened, family gets taken care of, but literally week upon week, month upon month, you could even use the health and wellness program to kind of really motivate and drive your employees. And, you know, it's a real problem. You know, when we look at the key findings from Britain's Healthiest Workplace, you know, these are real issues that do need addressing, and this is one way that it can be done. And I'm not going to talk about all of these. You'll have heard of these many times, but it is a way of getting big business benefits for the smaller business. And even if this is for the business owner, the one thing I would highlight on there is the Blue Crest health screening. So this is like your executive health check. Understand your health, then you can get early intervention, which is, you know, prevention is better than cure. And the saving on that alone for a business owner, that for me will be the best form of business protection, because you are making sure you protected the health of yourself and your other co-owners. Clearly, you know, private medical is showing a big boom at the moment. So again, it might be that for some people with their own businesses, you want to look at something like private medical to run in conjunction. So why Vitality again? So we've amended, you know, the way that you could administer policies online. So you get the cover online. We've automated many processes. We're putting you in control. The benefits back to the clients. So, you know, people can use guaranteed insurability options under the age of 55. So that's if they new mortgage, birth, marriage, promotion that leads to a pay rise. We can take the cover right up until their 75th birthday and bang on the 75th birthday. Again, that's slightly better than what some of the other providers do in the market, where they would leave a client with some gaps of a few months. So if you want cover for an exact C stage, again, that's something we can do. And I know I mentioned it before, but terminal illness within the personal continuation option, option, to me, I think that's my personal reason why I would look at Vitality. Again, you can use indexation. Again, if you, instead of the guaranteed insurability options, if you just want to make sure that this cover always keeps pace with inflation, use indexation. They only need to accept one of the indexes once every 3 years to permanently keep that on the policy. And, you know, all of these things are all designed to speed up the process from quoting to getting your client on risk. Everything from pre-sales underwriting using the Spectra tool to our own nurses, which we get really good feedback on how quickly they're able to get to clients, whether it's at home or work addresses when possible. And again, signature-free trust cuts down on that paperwork. Again, remember, any refreshers, anything that you want in terms of business protection, we have business protection on demand in the Vitality Academy, and that's the address you can see in the bottom right-hand corner. So there's up to 4 hours of CPD content available in there, so you can just dive in, get a bit of refresher if you've got a case, because I know if you're not using business protection on a regular basis, it's easy for some of the points to drift. But we do always like to speak to you, so, you know, please do contact us. And finally, you know, like, clients do take out relevant life plans following your advice. The key place to start is your existing clients, because the take-up rate, as we saw last week, is much higher when you're talking to existing clients. And then look at that kind of lottery ticket, adequate family protection. And again, this is a gateway opportunity, because if you have a relevant life plan conversation with a business owner, if he's in business with somebody else, or if she's in business with somebody else, they will probably all take out a relevant life plan. Where you have multiple owners, that's clearly giving you the sign that not only do they need family protection, but they could also need to be looking at ownership protection, which leads nicely into the conversation that Steve's going to be having next week at 10 o'clock. So in summary, the directors of their own limited companies need family protection, and the tax saving is hugely attractive. Employers are interested to offer employees a relevant life plan for a number of reasons: to retain valued employees, to improve health, wellness, productivity, reduce absence. They want to be able to attract really good quality employees to come to work for them, and that means they need to compete with the sort of the paid packages and the benefits packages of some of the bigger employers, which again can be done with a relevant life plan. It is the most frequently bought business protection solution. So I'm sure the numbers I saw, about 25,000 relevant life plans were sold last year. So this really is a huge market. And again, we're talking about the opportunity for them seeing the step over from relevant life plan into the ownership protection space and other aspects. So if you've got any clients who have dividend income, you need to be thinking around the relevant life plan. So do you want to have a conversation with them to show them how they can extract profit from their business and invest it in their family's future? Because that's what it is. It's not a necessary evil. It's investing in their family's future by making sure they've got adequate family protection in place. So we would like to hear from you. Please, if you've got any questions, fire them in on the right-hand side, and we'd be really happy to answer those now at any given time. If you want to come back to us at any point, take a note of our email address, protection.specialists@vitality.co.uk. If you want to talk about anything case specific, I think that's always kind of the really good conversations to be having. And finally, like next week's webinar, so we're hoping that you enjoyed this week's. It will not be myself for the next two, so I've got Stephen Harold next week, and we've got Gary King on the 7th of April. Still chance to register for those sessions as well. And finally, it's time for you, time for your thoughts, your feedback, questions. Please fire them in on the right-hand side, and yeah, let's go and check with Steve to see if we have any comments in there. But thank you all for joining us again. That's Steve.
Hi, Paul. Yeah, certainly we've had quite a few questions coming through. We'll try and get to them all, but I'm obviously conscious of time. Certainly got the usual ones. So can we have a copy of the slides? Yes, we will get those across. So we will send a CPD certificate and a copy of the slides along to you, everyone who has attended. There was another comment there from Dave. Dave, hope your dog's all right. He missed the start because he had to go to the vet. Is it, he missed it, or are we running it again? We won't be running the session again, but we will be hosting a recording of it. So you can click on a link and listen to Paul talking about relevant life from the start. Obviously, I have to apologise for Paul. There's a bit of a hiccup at the start, and that was purely down to myself. So sorry there, Paul. So we've had quite a few questions around trusts that you were talking about, so we can address those. With relevant life itself, so a question that's just come in, are the benefits taxable on the business? Well, I suppose with a relevant life, we need to remember that the proceeds are paid via the trust to the estate of the employee, so it goes to the kids, the wife. So it's not actually being received by the business. So no tax implications there for the benefits at all. We've had a couple of questions on the trust process. So do we need to add additional trustees using the signature-free trust process? So you can place a policy on risk under trust with just the employer as the first trustee, the settler. We obviously always recommend you add additional trustees. Now you can do that at that time. If we don't do it at that time and you want to do it at a later date, then there is a deed that you can do, a manual deed, but it would be paper-based with wet signatures. So that signature-free process is only available at the moment at point of application. What else have we got here? So there's quite a few. So there's a question about removal of trusts. We talked about removal of trustees. We talked about how if you move employer, you can, or take the policy on personally, then you can just remove it. How is that done? So again, we've got a a specific deed that allows the business owner to be retired or removed as a trustee. The question was, another question there is, does that trustee have to agree to it? Well, it depends, I suppose, whether there are already additional trustees in place. So if you want to remove the trustee and it is only the employer there, then yes, they would need to agree to that and we would appoint a new one. If you already have a number of existing trustees in place, then they can effectively retire the employer without necessarily having their signature. So it all depends on how the trust has been set up originally. But we have the deeds there to help you to do that. We had a question. I'm interested in your thoughts on this, Paul. Can Rlp be used for mortgages?
I was going to say it could be. The relevant life plan that we offer is only a level or an indexed, but it's going to pay the money through to the family members. So if they've made sure that the person who needs to repay the mortgage in the event of death is one of the beneficiaries, yes.
Yeah. I mean, that's exactly one of the trick question. That's exactly what I have said. But effectively, I don't think there's any HMRC requirement to say it can't be used, but we need to consider the implications. So as you say, it's a level term. It's probably based on a multiple of salary rather than actually the level of debt. But ultimately, it's paid to the beneficiaries of the trust. What they choose to do with the money is up to them. If there's a mortgage to be repaid with it, then there's nothing to stop them from doing that. What else have we got? I say that there's lots here, and I'm conscious of time. We've only got a few minutes left. So what happens if the earned income reduces after the RLP has been set up? Well, nothing really. The life cover is fine. It can carry on as it is. All I would be conscious of is obviously that person still needs to be an employee of the business for it to continue to be a relevant life. So whilst the actual earned income could potentially reduce and they can still have that full sum assured, actually, because obviously that is only assessed at point of application if we are financially underwriting. Moving forward, the client just needs to continue to be an employee. If they cease being an employee, then you would need to use that continuation process and get that employer removed as a trustee. There's lots here. So again, I'm conscious of time. We're nearly up. So what I might suggest, Paul, is if we just do a question and answer document and send that out to all attendees. So if I haven't answered questions,
and thank you for firing in the questions. It's always nice to actually see those questions. So we will make sure we've compiled a full question and answer sheet, and we'll send it out with a copy of everything later today. Yeah, certainly. We'll get that across to you. As I say, lots of questions, so not much time to get it done. So yeah, I'll just reiterate your comments, Paul. Thanks for everyone attending, and hopefully you'll be dialing in next week as well. I was going to say, and I would urge everyone to join in and listen to Steve next week, because always an incredibly good session. So thank you, everyone, and thank you, Steve. Excellent. Cheers, guys.